All right, so today we're doing 2-1 work together. And so through the notes that you have, we are going to do a couple things. We have these accounts on the top of the T accounts, these T charts, so that we can decide and kind of keep in order and start learning how to increase and decrease, and if an increase means a debit or a credit. So for all these accounts, the left side is a debit and the right side is a credit. The left side for accounts receivable is a debit, right side is a credit for all of these accounts. This is the same. So you go through, and the debits are on the left, and they're just wanting you to get, why are we doing this? Get you to think. Debit on the left, credit on the right. Okay? So then you have to decide what side increases or decreases. All right, so cash, accounts receivable, supplies, and prepaid insurance. These first four are called assets. Remember, there's something of value. And how do you increase an asset? We have decided you will increase it with a debit. So if you receive cash, you will debit it because you will increase it. If you sold services on account, you will increase it, meaning that Sullivan Company will owe us money. If you buy supplies, you will increase supplies with a debit. If you pay for insurance, you will increase insurance. Now you have more insurance. So you debit assets to increase them. So then obviously the opposite side is a decrease for those assets. Now, normal balance. What does normal balance mean? Normal balance basically just means that you have the normal balance is the side that increases. So wherever you have an increase, the normal balance of cash is a debit. And whenever you have an increase, the normal balance is a synonym for debit, or for increase, I guess. If you have increase, that means that's the side that's normal. So the normal side for all assets is a debit, meaning it increases on the left side. If you wanted to lower it, you have to do the opposite of the normal balance, which is credit or decrease cash. So to increase cash, you debit it, which means you're on the left side of the T account, and means your normal balance is also the same as the increase. Okay, so that's for the four assets. Now, accounts payable is a liability. This is the other side of the accounting equation when you have assets equals liabilities, owner's equity. Liability is a bill. So we would buy supplies on account from Sawyer Supplies, meaning we would pay for them later. How do you increase a liability? You increase it with a credit. So then this is accounts payable is also a liability. If we buy something on account, meaning we'll pay for it later, we increase it with a credit. So account payables will go up with the increase, which is a credit. They will go down when we pay these bills off. We will have to debit them, and lowers the account payable. So how do you increase account payable? Credit it. How do you decrease accounts payable? Debit it. Normal balance, we learn from the assets, is the same side as the increase. So a normal balance for liabilities is a credit, meaning the increase side. Normal balance is synonym for the increase side. If you want to do the opposite to increase, you would do the opposite of the normal balance. For liabilities, how do you decrease it? Debit. Increase with the credit. Parker Vogel Capital is the owner's equity part. You increase equity with revenue and or sale on account or sale for cash. You increase it with an investment. You decrease it with an expense, or you decrease it with a withdrawal. When we are working with capital, we will increase on the credit side, which means you decrease the opposite side. Normal balance is the same as the increase side. So the normal balance capital is increased with the credit, so our normal balance is a credit. And that is 2-1. Okay.